Hey there traders, it's Jeff from thestockbandit.com, and in this video I want to take a look at a stock which is Royal Caribbean Cruises, RCL, and you can see that this stock went through a pretty significant correction coming off of this early 2011 high. This thing was up here in the high 40s. It was really pushing $50, and then this thing came all the way down into the teens as of a year ago. So that was a significant correction. Now over the past year this thing has lifted and then really stabilized. And so it's kind of in the middle of recovery mode. You even could make a case for a cup and handle pattern here, with this being the handle, and now the stock is just now starting to exit that handle. Generally, when you find this type of pattern, what you do is you take a look at the height of the cup area, and in this case it's around $10. Now the breakout is right around here, around $32. So the projection would be really another $10 move up to there, which would take this thing to around the 42 level if this pattern were to play out as anticipated. However, you can't just do that when you're taking a look at a stock like this. You've got to consider other things. Now the pattern is what I'm going to base my positions on. It's what I think every shorter term technical based trader is going to utilize in their decision making. However, it's not just about the chart. You have to look at event risk, and that might require at times that you're going to modify your targets and your holding period. So in the case of this RCL, you've got earnings that are scheduled for October 22nd. So on 10/22, you've got a major fundamental event in which, as a technical trader, you have zero edge. And so seeing that this thing has a $10 projection out of this type of pattern, you can't just buy it and hold it and expect it's going to make that type of move. It might, but it might not. And the biggest thing is, the harder, it becomes incredibly hard when you're holding a position through an earnings announcement. It becomes virtually impossible to protect that position, to manage the downside risk that you're incurring when you're holding a technical based trade into a fundamental event. So always consider event risk, whether it's a conference call, whether it's a same store sales in some retailers, maybe it's an earnings release, whatever it happens to be. Always consider the event risk that you're incurring when you put on a position, and understand that it might not just be about the pattern. You might need to kind of curtail the projection that you're going to give it. Maybe you look to grab a little bit of a 1 week type of move, and then you exit and bail out ahead of that major announcement. So whatever it is, always be flexible. Don't simply go by the chart, because you've got to watch out for some of those events. Thanks for joining me for this video. I will have more for you soon, but in the meantime, trade like a bandit.